The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we are heading for July 1st tomorrow. The way you figure that out, folks, is you take the 30th and you add 1 day. And, of course, we have the holiday coming on Monday. And then on July 5th, we have the culmination of what we think could be some of the biggest cycles we've seen in a very long time. I've had two requests this morning. The first one comes from Fred. Fred, I hope I answered this one for you okay. But he asked me, how do I go about when I first look at a chart, what do I first look at as far as trend? Well, from my days back at Commodity Corporation, when we used to run just about every kind of study on anything that was out there, the first thing they looked at is if it had higher bottoms and lower tops, it was in a downtrend. Had higher bottoms and higher tops, it was in a downtrend. If it had lower tops and lower bottoms, let's try that again, Larry. Higher bottoms and higher tops means you're in an uptrend, and lower tops and lower bottoms mean you're in a downtrend. Just picture a channel line with them bouncing off of it. That's what we hit yesterday in the crude oil. We went right up to that 49 level, which was a 61% retracement off the high. You had lower highs in there, so your trend was down. So until crude oil gets above 49.20 in the August crude, we still should be, heading down in the crude oil. The second thing that we looked at were the cycles that were out there. Now, when I was at Commodity Corporation, and Twentyman was there at the same time, we looked at a lot of things that were related to the nominal cycles that William Hurst put out, and then also Dewey from the study from the Foundation of Cycles. We had a whole section on that we looked at. Later on, I became more interested in the astrology part because I saw that on these really big days where you have so many things happening, there's so many planetary things occurring, and that's what led me to that. But you don't see that very often. Maybe twice, 3 times a year will you see these big days occur. But that's neither here nor there. The third thing that we looked at were the patterns that were there. I was looking at the Gartley pattern, since 1975, which has always been a good one. I didn't find the butterfly until 1989 with the help of Bryce Gilmore. But the 3 drive to a top pattern and the 3 drive to a bottom pattern were really very, very incredibly accurate and easy to trade, and gave you the minimal amount of risk that you could possibly use. So that's one of my favorite patterns, is that 3 drive pattern. But that pattern, you have to have a great deal of symmetry with that. So with all those things together, you have cycles and trend, and then we had to have the ratios of the Fibonacci summation sequence. And I only use, 61% and 78% for contracting. I use 1.27 and 1.618 as expanding. In any market that goes past, 1.618 is certainly in a big move up. If you'll look at the first chart that I posted in here for the Tiger Den today, and by the way, those of you folks that are out there that are trading at home and you feel like you're alone and you don't have any questions, or you'd like to have somebody around talking to, go to the www.tfnn and get into the Tiger Den. Not only do they have some great announcers in here with, I can't remember, Basil, Steve Rhodes, Andy, all of them. Daryl, Basil Chapman. All of them they're just really, really great information. And some of the trades that they post in the room from Mr. Z and Fletch and some of the other fellows, Jay, that post in there are really, I'm sure I'm missing someone, but that's a memory lag. Anyway, they give you some fabulous information here. So, it's really a good thing to do. The other thing you can do is what Mr. P does, and that's talk out loud to himself. And I do that all the time. I never have to worry about the answers when I talk to myself. But anyway, those are some of the things that you might want to do if you get a little bit of loneliness in trading, and it is a lonely business if you have to handle that yourself. The second question that I had by email last night was from a new trader, and he said, "How do you actually learn to beat the markets?" Well, first of all, remember that trading is a journey. It's not a destination. Once you start this, you're on it for the rest of your life. Look at me. I'm, getting up there in the years. My teacher, John Hill, 89, is still trading. Dr. Miller was 93 when she finally stopped trading. And so, this is something that you love to do. It's fun. It keeps you up to date on what's happening in the world. You can see what's happened with this Brexit thing. That's the main thing that you have to realize, is that these things come and go, and they're always going to be interesting. And it keeps you up to date on what's in the world. Unfortunately, being able to be on a show like this, we get to meet people from all over the world, which is really nice, because you meet some wonderful friends as you go through this. But in order to be successful, the first thing that you have to have is you have to have a belief system in what you're using. It doesn't make any difference whether it's an 8-period moving average, a 18-period exponential moving average, or a crossover, or oscillators, or any of those things. As long as you have a belief system that it works and you follow the rules of that belief system, you have a really strong probability in being successful. Now, if your belief system has some flaws in it because of the patterns or the methodology that's there, that's something that you have to learn to correct. But you can do that, over time. That's why if you're trading, you should never trade with real money until you have a really strong belief that you're able to actually beat the market. And the problem is, once you start to trade with real money, that changes the whole game, because we keep score with money, and money is the emotional thing that makes us go crazy. And especially these days, when we have our equity runs right on our computer, where you can actually see by the cents how much money you're making or losing. That is such a bad thing to have on your computer. I just can't tell you strongly enough that you should not be watching the money. Follow what you should be doing with the trade preparation and the execution. Don't worry about the money. The money will be there. That money is just another distraction, like the monitor itself, because when you have that monitor and you're watching every uptick, you're really putting yourself into a bad trading environment, because if you're long, you focus on the upticks. If you're short, you focus on the downticks. And that's the main thing. And you don't want to do that, because you want to focus on doing the right thing. Our bodies are formed to prevent pain. So if we're looking at something that's going up, and we want it to go up and it's going down, that's pain. So what does that do? That makes us make the wrong decision. So try to keep in mind that you have to be able to do that. After you finally get your belief system, you have to have a good mental structure. In other words, you have to be able to mentally prepare yourself each day for trading, because trading is it's an intense business. You have to have a little bit of an idea of what's going to go on. But if you study the markets a little bit, you should be able to do that. So what we'll do now is we will go on to the charts after this break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart of the U.S. dollar index in the room, Tiger Den, so you can take a look at it. And as you can see here, we were completing a Gartley pattern here on the 23rd. That was a strong indication that the dollar was going to rally, i.e. the euro was going to fall. And if you looked at the British pound chart, you could see that it had been making lower tops for months, and it was making a 61% retracement at the 150 level. So it was interesting to see that it actually, held up that to that level pretty good. Okay, now the next thing that I wanted to bring to your attention is after that move that we had in the British pound and the dollar and all these others, the markets held at really strong support level, especially here in the euro over a long period of time. If you take a look at this euro chart, as we have several times, it's held up extremely well, and all I have to do now is to find it again, and I just had it ready to go. Boy, I'll tell you. All right, we're not going to worry about that euro chart. We know that it's made higher bottoms exactly at the 61% retracement at the 109 level. So as long as the euro doesn't get below the 109, it still should have some more rally behind it. The long-term charts do indicate that the euro could get to 99 or 100, but that's neither here nor there. That's longer term, but right now it's held up extremely well. Remember, folks, they bombarded the world with some of the most negative news we could have. Britain turning out the lights, recession in Britain, which would come over here and everything else. I mean, this is the fear tactics that these big firms use, to get you to react the wrong way. But, that's neither here nor there. The world's not going to end if after Britain leaves the European Union. I don't think there's any any question that that's not going to happen. They've been around for several centuries. They're not going anywhere. That's at least not right now anyway. Okay, now we've got a big move going in silver. It's held above the levels that we had looked at. We've had good open interest over these last several days. We've had a nice move in silver. We got up to the 1857 level. We backed off about 25 cents. And then we've come right back again to challenge those levels, which tells us it looks like we have that ABCD structure that's going to take us to at least 1880 and probably $19 per ounce. So anyway, I always recommend buying these silver rounds. So if you get a chance to put 50 or 100 bucks away, you know, buy a few of these coins because they'll be more valuable in the future than they are now. And even if they do go down in price, you know, they've always bounced back, and they're beautiful numismatic coins too. So I don't think there is any great risk with that. So we'll see what's going on. Terry in the den just mentioned that the European Union needs Great Britain more than Britain needs the European Union. I think you're absolutely right, Terry, and that's one of the reasons why I think that the euro was never taken into Great Britain. They still use the pounds. All the other countries are using the euro, but not Great Britain. So, well, whether that means a lot on a regular basis, I don't know. But I tell you what, that London is one of the most fabulous cities in the world, hands down. I mean, we get to travel to a lot of these places, and it's really spectacular. And of course, Hong Kong being our second home because Sarah's from there is probably one of the most incredible places to visit. And it's really a spectacular place. The people are incredibly friendly. It's very inexpensive to go there unless you buy a piece of property. But the weather's nice, the people are nice, the scenery is spectacular, and you're only a 20-minute ride to China to seeing some of the fabulous stuff that's actually there. Now I've asked to talk just a little bit about crude oil here because we did hit this retracement yesterday in crude. You'll notice that we got up to that the 49 level. That was a 61.8% retracement of the high that we made back on June 9th. Then we came down, we made a slightly lower low. You'll notice the low that we made there was a 78% retracement of the previous swing that we'd had, which was down around 42 and change. And now we rallied back. So this is the trend line that you're looking at in gold. You have higher, lower tops and lower bottoms. So this is still in a downtrend. Now, good support, if this is going to be good support, should come in at around 47.75. That'll be a 61% retracement of the move we've had over the last 3 or 4 days. So sort of watch that. Now back to the task at hand, and that is looking at the stock market. And we'll put the first one up here will be the NASDAQ that we'll look at. Folks, the thing that we're looking at in stocks, and I have to say that I don't know how it's going to work itself out, but we've been talking about these days between the 28th of June to the 5th of July as being some of the biggest cycle days. Now, there's a possibility that it came in a day early on the 27th. That was the Thursday where we hit that low in the stocks, and we've had this really strong rally since that time. So it wasn't Thursday, it was Tuesday. Yeah, it was Tuesday. Yeah. Anyway, what we'll do now is we'll look to see what happens from that level. But that's a very, very powerful cycle that'll tell us what we're doing, for the rest of the time. So we'll look at it. Now, if we looked at the Bradley model, which we've done, and that's why it's difficult when you have these straight up rallies of 500 and 600 points in the Dow Jones. You'll see now this is the one this next one we're going to look at here is the Dow Jones along with the Bradley model. And as you can see, that crest that we're coming into right now is a very, very powerful cycle. And the reason why I say that is that it should be down between, June and November, July 1st and November. If you go back and look at the cycle from March to April, you notice that had a very strong upward bias. The cycle from October through January had a strong negative bias. So that's what it is. It's a bias, and if it starts to line up properly, then you've got some pretty good things that you can use as far as where you think the market's going to be 2 or 3 months out. But you've got to let the patterns try to help you find out the entry points, because that's where the key is. The key is not in how much money you can make, it's how much money you don't lose. And that's the biggest thing that you've got to keep in mind. It's not how much money you make, it's how much money you don't lose. And two of the main reasons why people lose is that they overtrade. And the second thing is that they put their stops too close. Those are the two main reasons why people lose. And how do I know those figures? Well, I've been involved in a whole lot of legal maneuvering because I was an expert witness for 6 years, and I saw just about every conceivable trading system and Ponzi scheme that you could imagine out there. And what you got to do is you got to try to find, you have to go through all these statements just to see what's happening. And the big brokerage firms like Merrill Lynch, I don't know if they still do it, but they used to, they would provide, you know, what the statistics were of the number of customers that made money, that lost money, and all of these other things. And if you learn from those statistics, you're far better off.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of crude oil, the daily chart that takes us back all the way to the low we made at $26 a barrel. You notice that if we get down to $45 a barrel, I know that's quite a ways from where we are, but it's no more than what we've already fallen from the high. We went from 51, down to 48. That's $3 a barrel. Another $3 a barrel gets you down to 45. That will set up a beautiful ABCD pattern, as you can see. Have a nice ratio there of 38%. This would be one of the strongest buy signals that you could get based on what Gartley taught in his book, Profits in the Stock Market from 1937. He said, look to buy the first ABCD correction in a bull market. And if we consider this may be a bull market and we're getting the correction and we're right at the right ratio, this is what you would want to be watching. So keep in mind that that's the main thing to watch. Okay, also what I wanted to do is to wish a happy birthday to one of our listeners out here, Brent from California, who always calls in and gives us some nice words of encouragement. Happy birthday to you, Brent. And now we have Max from Fort Lauderdale. Max, how are you today?
Good morning, Larry.
Good morning.
Getting back to your Bradley model.
Yes.
I know sometimes you post an inverted model. Now,
yes.
Is what you post, is this a straight-up model or an inverted model?
This is the straight-up model, and the reason why I haven't tried to do the inversion is because I cannot see. I thought if it were going to be coming down strongly, but it's certainly not. After we hit 17,100 in the Dow, we've rallied 600 points. Well, 550 points. So that tells me that it's that close. But the problem is, Max, that there's so many dates coming in from the 28th of June to the 5th of July. But after the 5th of July, all of that's there should be out of the way, and then we should determine, whether we're going to have another trend up. Because if we do start higher, this market, during April, May, and June just wouldn't even back off to a 38% retracement, even the fact when we had turning the lights out in the UK. So this does not look bearish right now. It certainly doesn't.
Okay. Thank you.
I have to wait until the 5th. That's why I'm, waiting to see. I've gone through, we've looked at these Bradley models over the years, and you've really got to wait until the last part of it's done, because the last one could be the one that really changes the direction of the market. But right now I have to just sit on my hands.
Okay. Thank you.
Thank you for calling in, Max. I certainly appreciate it. Remember, folks, the Bradley is very good at the dates that it hits. It's usually within a day or two of some pretty good market turns, but the trends from the highs to the lows is usually pretty good. And also, it is only a problematic thing with probabilities. It is, and it certainly can be problematic too, but it's only related to patterns and probabilities. So there's never any certainties involved with this particular type of thing. What I'm going to do in the next day or so, I want to put together the transits so you can see what these planets are looking at as they line up here coming into this July 5th zone, so we'll be able to see an idea. I don't think there's going to be any problem in telling the direction after July the 5th, because after that it should be relatively easy if the patterns line up like we think they're going to line up. But until that happens, you just have to wait and see if that's going to be the case. Right now the market's still about unchanged on the day, not really doing very much, so that's neither here nor there. The other thing that I want to mention is yesterday we had a big move down in the corn. It went down and touched the 786 again, down at the 383 level. It since rallied about 6 cents off that bottom, but that means that 383 level in D's corn is very, very important, because if we go below that, then you're going to be able to see a market that could possibly attack the old lows down around the 360 per bushel in the corn. Wheat looks a little bit different because wheat is much weaker, and there's a possibility we could be reaching a multi-year low here in wheat, about 15 or 20 cents lower, which would be a really nice three-drive pattern. But again, that's into the future. That is nothing happening, right now. So you want to just, wait and see till that is done. The question arises is where can you buy the silver or gold? The gold, I'm still believing that we've still got a chance to get down to this level of 396. If you'll give me a second here, I'll put the chart in. We've had in this several times here. 396. Let's try 1296. And that would be a 61% retracement off of the low following the Brexit vote. And that's when we had the $110 move. Since that time, we were able to back off not quite 50%. We backed off about $50 an ounce, and now we've gone sideways for 4 days, which is actually a pretty good sign if you're bullish, because it doesn't give you much of a chance to buy it, and you'd like to have more of a chance to get this moving in the direction higher. I really believe gold's got a chance, folks. Every time we've taken out these highs, whether it's 1301, 1306, 1337, it just keeps working higher. And if you remember from our really long-term chart in gold, we've got a chance here because of the picture for this long-term actually looks really, really bullish. This is going back to 1980. You can see the high on the far left there at 1980 when gold was $860 an ounce. We then dropped all the way down to $260 an ounce into 2001. And since that time, we've been in a pretty big bull market here for the last 15 years, and I'm not so sure that it's over, because when we pulled back, we came right back to a 61% retracement, and we hit that 20-man line that was lined up pretty nicely, and it looks to me like we're ready to go a lot higher. What we're waiting for is another ABCD correction, the one like we had at 1202. We had another one at 1255. That was the one right into the Brexit one. And if we get another one at 1296, I want to take a look at that one too, because those are ABCD patterns. You're able to quantify your risk. And if you're right, the risk to reward is phenomenal, usually 3 to 5 to 1 or more, sometimes even greater than that if you're capable to hold off the main thing. Now, one other question that we've had is about the soybean market. We talked about this the other day. We've had a really good rally. This is the chart that we talked about the other day. This was the November soybeans. You can see them making that same ABCD pattern right at the exact 61% retracement. They rallied all the way up to the 1120, 1125, 1130 area, and now they're consolidating that move right now early this morning. So those are the ones that we want to keep watching as we go through looking at some of these things this morning. Crude oil is still going a little bit lower. I believe that there should be some support at the 61% retracement off this last swing, which is $1 lower than where we are right now at 47.60. But if we get below 47.60, we're setting up a perfect ABCD structure down to 45.40 a barrel. And that's where you want to buy oil, 45.40. 877-927-6648.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've had another question here about the Dow Jones, and this is the pattern that we had coming into the Brexit thing. I wanted to mention to you what happened here, because if you take a look at this, the Dow only got down to that 1.27 expansion number at 17,100 and has come back very, very strong. So that really negated any bearishness. But none of this will mean anything until we get through July the 5th. That's the way it looks like from here. So there, and that's the chart that I'm looking at now is the Dow Jones, and so that's why I'd like for you to focus on that, because those patterns were similar, but the difference is we went through that second pattern and then we came right back up through it. So that's changed a little bit, and I believe it's because of the cycles that we have going in here. I'm having probably more emails about this cycle date than anything I've had recently. And basically what that is, folks, it's just a culmination of a whole lot of cycles and patterns that are coming together from dates long into history. I mean, some of these dates go back into 1928, 1929, 1932, 1938. I mean, these are numbers that are way, way out there. And what they are, they're mathematical relationships to other highs and lows. And these are perfect relationships within 1 or 2 days. And when we have this many of them coming together like we have during this time period, you're expected to see some really wild stuff. And that's in fact what we're looking at. The last time we had anything even close to this was on March the 5th of 2009. And if you'll remember that week, I was incredibly bullish because we had all of these cycles. We had a 3 drive to a bottom pattern, and the Dow Jones was setting at exactly 61% of the 1987 low. And so this was another really strong factor that was important, because remember the 1987 low was exactly 61% of the 1982 low, which happened on August the 9th of 1982. That's when the big bull market in Treasury bonds, i.e. lower interest rates, started. Now we're let me see, how many years is that? That's like 34 years into this bull market. So it's been one of the longer bull markets in history. And when it's finally over, this is going to be, I believe, the black swan or the canary in the coal mine that makes everything change a little bit, because no one thinks that this could happen, but we'll have to wait and see if it's going to be something really crazy happening or not. Remember, the astrology things are just probabilities, just like anything else, and so are the patterns. So that's what we're trying to do, because when you're trying to figure out what the next step to be is, you got to figure out how much money you're willing to risk in order to see if you're right or wrong. That's the real key to look at. Now, in the Treasury bond market, we had we dropped about 3 handles yesterday, 74 down to almost 71. And now we've rallied back, and we're making a 61% retracement now in the Treasury bonds up here at 172.24. We're trading at 172.20 right now. And if it gets above 173.20, that would tell us that we're probably going to go up and make another high. But until we take that high out, it doesn't really seem like it's going to do it. If we look at the Treasury notes, and this is the much larger market is the Treasury notes. You'll notice that this market looks even more bearish. We did make that new high, and we couldn't even make a 38% retracement of the notes, where bonds went up and made a triple top at that 174 level, but we could not do that in the notes. And that's another sign. Along, when you look at the German Bund, what's happening, all of that tells us that we're looking at something really, really big coming in here. I believe this is going to be an outlier event, this July 5th time frame, but we'll wait and see if that's going to be the case. I know people asked about what's really happening with the Great Britain thing. Folks, I'm a technician. You can get 5 of these guys on the tube, and they're going to get 3.5 different answers for each of them, and that's their job, and I think it's wonderful. But basically, that's oh, wow, you talk about being Christmas Day here, folks. But believe it or not, we've got Priceline Charlie on the line from La Paz, Mexico. Charlie, how are you?
I'm fine. How about yourself?
I'm still above ground, taking nourishment, my friend, staying away from open graves. What can I do for you?
In the last conversation you said that Priceline was going to be 1150, and we have to watch to see what it does. Remarkably, it ran right very close to that number.
Yep, I remember that.
How did you come up with that number?
I have this little crystal ball, Charlie, that sits next to my desk, and I rub it and I say, magic dust, baloney, and puff, the number pops up for me. I just look at Fibonacci ratios, Charlie. That's really all I'm looking at when I'm watching it. There's nothing mysterious about it. There really isn't. Priceline has had some, incredible moves like we've all seen. In fact, what I'll do is at the break here, I'm having a little bit of a data problem here, but we did hit the exact low on the Priceline was 1148. So I missed it. I thought it was going to be 1150, and it got to 1148. And all that was a retracement from the old high that we had. And but the thing is, when it went up to that area of almost 1400, we got to how high did we get? We got to wow, that's quite a bit. Yeah, we did. We almost got to 1400, didn't we? Got to 1370 or something, and then dropped $200. So
right.
That's what it looks like. And right now, it looks like Priceline's getting ready to go down again, because of the fact that we've had a nice retracement this past week, and that's giving us a pretty good shot. The 61% retracement of this comes in around the 1262 level, I believe. So we'll see. And well, that's where we're trading right now. Yeah, 1262. So whether this is going to be it or not, we'll have to wait and see.
So I figure it's like making a right turn. You got to first look to the left, and then you make your right. And here we are. We're at the point, I think, that we should be looking for it to be heading down. And if it doesn't, what would be a stop if it's going up?
Well, the exact it hit the exact 50% retracement today at 1274, and we're already $14 below it. So it opened stronger and sold off. But I would say as long as it doesn't get above $1,280, that would give us an ABCD structure on the downside all the way down to the 78% retracement at 1070.
Excellent, excellent. I appreciate.
But if it gets above 1280, be careful, Charlie.
If it's above 1280, just step aside because you're not taking much of a loss right now.
That's correct. And remember, I don't want you out there selling equipment to cover margin calls, my friend.
I never sell my equipment.
I didn't think so. How's the equipment business down there? Still okay? It's still a buyer's market?
Yes, it is a buyer's market. On top of it, we opened up a solar company, and we're doing very well with the solar field in the government area. Because right now, the private sector, the people are having a bit of a problem with the money, but not the government. The government seems to have sufficient funds that we're able to spend it.
Okay, Charlie, got to run, buddy. Thanks for calling in.
You.
Appreciate it.
You're welcome. Bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we got a call from Bill in Arizona. Bill, are you there?
Yes, I sure am, Larry.
Bill Koval, WDK Analytics. What can I help you with, pal? Or what can you help us with?
I've been carrying some gold charts in my newsletter here for the last week, 10 days, 2 weeks, and I sent you a chart about an anomaly between the mini contract and the regular one, wherein the according to my volume line cross with price, the mini actually signaled lower prices a couple of days before the big contract. And I'm just wondering, I don't have enough experience with it to know how the two trade against each other, but I just wonder if you had any insight.
Yeah, it's too thin. It's a very thin market to trade, Bill, in my opinion. I've watched it. I mean, I can see I don't trade it, of course, but it does have periods of, it'll be a $2 or $3 spread sometimes between bids and offers, especially at nighttime. So it's not worth it. But, and the little guy is not what moves that gold market. The gold market is moved by, guys like Soros and Druckenmiller and people like that make it go. So I think it's good to watch it because maybe it does mean something, but the bigger contract is the one you have to watch. And the open interest in both gold and silver have held up during this time. More people keep coming in to buy it, so there's no reason to think that it's getting ready to go lower.
Huh, interesting. Well, listen, I appreciate that. Yes, I'll continue to watch the two together. No, if I were to trade it, which I don't trade gold now, but certainly the better liquidity is always the one to prefer.
Absolutely. We'll have you on in a week or so. How's that?
Sounds good, Larry. Well, listen, you have a good fourth.
You too, my friend. Thanks a lot, Bill.
Yep, bye-bye.
You bet. That was Bill Koval, WDK Analytics. Folks, we're coming in. Tomorrow's going to be Friday. The way you do that, you take Thursday and add 1 day. And then we've got the big weekend coming. And then July 5th, I'm going to have some special charts looking at where things are in a longer-term perspective and what's going on. So 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.